Market Wrap, S&P 500, Index Options in Directional Movement, Long, and Directional Movement, Short. We're going to talk about volume today on the put side. Here at the 1250 strike, there was 48,000 of these traded. And not only that, as you can see here at the 1240 put, and it was up, it was marked up today, and there was 24,000. That's this one right here. See? And you can see the highs were 19 and they were 1460. Now, does that mean that they're all the way marked down on the first pullback? Well, understanding the imbalances in short-term overbought and oversold cycles with forward-looking earnings around the corner, you're going to have to be ready to know when to buy and why it would be good to buy. And we can show you that the volume here was 48,000 contracts on the 1250 S&P 500 right here. 48,000. Okay? Now we know that we got 24,000 traded, so people are making big bets that it's going down is what I'm getting at. 24,000. Look at here. Now they're coming right here to a 218 1250 put, and they also accumulated 12,000. How about that? Does it mean that they're right? Who knows if they're right? We'll know each day when we get in the earnings season. People are buying big protection ahead of the earnings that are starting next week. There is a 1200 put for 317 that I've had in here for a while, and it was marked down today, and there was 6,500 of those traded. So people were getting below the marketplace at that strike price level, at that support level on the S&P 500 index. And that is the most important part. Do you have any questions, MMT? Do you, uh, rephrase the question. The S&P? Well, it's going to have ranges down there at that support level in the shorter term of 1200, and it's going to have an upside of about 1343. And if it, that's more of a forward-looking cycle because you're going to have to deal with the earnings. Now, having said that, I said that price volatility was going to increase in the beginning of the week, last week, because we have to understand that volatility is here. We had a triple-digit gap to the upside. Now today we sold down triple digits, and then they rebounded 100 points off of the low. So the European mess has got something to do with it, and people are increasing their volume because they have a lot of fear here, and it's a 1200 put is what it is. So here, page save. Do I think that it's going to happen in a monthly time frame? No. Do I think that you can buy wholesale and sell back retail on an intraday level? I do believe that because next week, I believe they're going to have 4 days, and they're putting on the big bets. And these are, see, what they're doing is they're taking 48,000 of the near-term weekly 1250 put right here in this highlighted color. That's what they're doing. Okay? 48,000 right there today, total volume. 24,000, now they're starting in February. Okay? So look at the volume weighted purchases, 48, 24, and 12. How about that? So that's the volume side of a lot of buying that we hadn't seen in a total volume count right here. So there's your volume. And we'll talk more about this. So it's going to be range bound and it's going to have support levels. And those support levels are where markets will be made and or they will fail. And then the transaction is if there are more sellers, then naturally that's the side of the market you would be on the shorter time frame, particularly moving forward in the earnings calendar next week. With the high beta stocks, yes, we know there's lower growth. Are the bulls going to be able to discount it and buy it? We're going to find out. Are they going to mark the earnings down and get the bad news out of the way? That's what most of them are doing. The scorecard is showing an increase in warnings season. Is there any other question I can answer about that? Open interest is really going to have a weighting because it's going to increase. You can see the open interest today. Look at that. That's 48,000. There was only 10,000. Was 100 and yeah, right there. And you can see the blocks right here in the open interest and all of the strike prices. So you do have a lot of people on this side of the market. And, well, markets can go ahead and walk it the whole other side. However, the current balances are imbalanced, and this is why we have the put side of the market getting marked up. This is where the money print, the SMF market maker money print is, and learning how to get your entries and exits as a discount buyer to the market and selling back to the retail people who like to purchase contracts.